Hi everyone. Today let's take a look at where the economy is going over the next year. Then we'll take a look at sentiment. Then we'll get into the charts, as well as my results for the week and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at the paths for the global economy, you can see either the economy dips into a recession by the midpoint of next year, or we just barely miss recession and find a soft landing. There's also a risk, and they are considering it small, that inflation sticks around, and an even smaller chance that China's economy implodes or its government wheels out some party-sized stimulus. So for recession, they're putting it at a 40% chance of an economic recession for next year, and this would affect, obviously, the whole world. Composite PMIs here in 2023 have been weakening. We've been talking about that for a while. Then this is depicting the recession, huge weakness in economic development. Then we would see a big rally into the end of 24, 25, and then culminating here in around 26, which wouldn't be so terrible. Interesting to see that timeline there. Of course, that would mean that the Fed is basically done with its hiking cycle, and we will probably see a pretty significant cut. In terms of what that means for us, they say just be aware of what's priced in. Current headlines say soft landing, and if anything but the soft landing comes, we could see a huge decline in markets, in my opinion. Soft landing, they're putting at 35% chance. Inflation stays generally between 2 and 3%, and we basically stay in the same range in terms of interest rates. Moving over to wildcards, they're saying we get a kind of recession while inflation continues to stick around. Typically, inflation goes down as unemployment goes higher, but basically they're saying that stagflation could happen where we have inflation and a weak economy at the same time. Second wild card would be an implosion of the Chinese economy. I think this is potentially more likely than the percentage that they are giving it to. They say around a 10% chance. I think it's a little bit higher than that in my opinion. And then third here, they're saying at 5%, China opts to put a massive stimulus package into the economy, basically because they're facing a crisis on the economic front. In terms of my opinion, I do think we will see a shallow recession. I think inflation is going to continue to be tamed, and I do think the potential for a weakening China is a little bit higher than what they're predicting here. So somewhat recession, but not terrible, kind of like the soft landing, but definitely within that recessionary definition. Moving over to the Fear and Greed Index, you can see we are officially in fear. Previous close was also fear. 1 week ago, we were in neutral. We talked about that. Momentum, fear, we're at the 125-day moving average, which is interesting on the charts, right at it. Stock price strength, definitely in fear. We talked about that, as well as market breadth breaking down here once again. Put-call ratio continues to go higher as markets are going lower. We saw this breakout of volatility. We talked about that as well. Safe haven demand, definitely in extreme fear. People are buying lots of bonds in order to lock in gains and potentially hedge from a market move lower. However, we are still seeing junk bond demand and extreme greed, which is interesting. Moving over to AAII Sentiment, you can see the bears are coming in. We're higher than the average now, much lower than the historical average for bulls. Makes sense as we dip into fear on the Fear and Greed Index. Neutral, still higher than average, which is kind of interesting, but you can see those bears are starting to surge back into the markets on the survey finishing on the 20th. And I do think this is going to continue to tick up next week. This is not factoring in the huge bear moves that we had at the end of last week. Moving over to the economic calendar for next week, we got the Eurozone unemployment rate, quite high here at 6.4%. ISM manufacturing PMI and manufacturing prices at 10 o'clock on Monday. JOLTS job openings on Tuesday here at 10 o'clock. Only piece of data that's really relevant on that day. Looking at Wednesday, we have global services PMI, as well as composite PMI, factory orders, non-manufacturing PMI, and non-manufacturing prices at 10 o'clock. Then going into Friday, it's that week again with non-farm payrolls coming out at 8:30, participation rate here at 8:30 as well. And then the unemployment rate, that's going to be the big one, did tick up a little bit in the last iteration. If that ticks up again, that could be a pretty interesting indicator that we might be moving closer to that recessionary environment. Moving over to max pain for the end of next week, quite a few options here at 1.57 million. Put call ratio quite high at 2.3. Look at all these puts in the market here. Max Pain all the way up at 443, current price 430. That's quite interesting. Typically that means we're going to go a little bit higher on the week. Big put wall here at 430. Bottom of the calls is down at 427. You could argue maybe we get a finish here between 425 and 430. That would be interesting. But I just can't imagine that we're going to go too much lower with how many more puts we have in this area versus calls. Moving over to the charts, starting off with the S&Ps here on the weekly chart. Obviously, this looks like a dumpster fire. Terrible candle, big bear move. Almost 3% on the week, finished basically at the low. I added a trend line here. You can see going from this candle on 19 September of 2022, marked some closes here in December of 22, marked some wicks in May of 23, and then right here it's sitting at about 430, so a little bit lower than where we are now. We're sitting at 432 or so. You can see 43.20. So we're a little bit above that trend line. Still bearish momentum, still bearish RSI. Everything still looks quite bearish in my opinion, but an interesting level might be worth watching. If that breaks, then for trend, you're looking all the way down at 420, which might end up being where we're going anyway. This is a clear breakdown, took out this midpoint, lower high, follow through. Everything looks quite weak going into next week. Moving over to the daily chart just for a moment, you can see we are actually right at that trend at that 430 level. We're stuck right there. I'm also watching this other trend, marking the highs here from July of 23, marking the lows in August of 23, and then we're right at that point now, which is also parallel to the highs from July as well as August. You could argue this is an area where we are going to find some support. If we end up pushing down to that 420 area, that would also be in the same area as the 200-day moving average, which is currently sitting at 418.11. Might tick up a little bit on the Monday session, but it does make sense that we would break down into that area, find some support in there, and then we can see what's going to happen. You can also notice that there's very little volume, basically where we are now, all the way down into that 420 area, and you would expect it to move through this zone pretty quickly in my opinion. Moving over to the NASDAQ on the weekly chart, basically have the same thesis here, high, lower high, big breakdown on the week, down 3.3%. I can see the trend line sitting at about 14,500, currently sitting at 14,700, so a little bit of room to go before we hit that trend. That would also give us a lower low here. Bearish momentum, bearish RSI, everything seems like it's going to go lower. Longer term trend line all the way down at 13,784. If this breaks, you would expect a bigger move into that area. RSI still above the 50 line, so this could absolutely go much, much lower. Like I said, it looks weak going into next week. Moving over to the daily chart, you can see it's a little bit different here than the SPY. We're actually sitting right at these lows here from the midpoint. Still have that high, lower high. But this midpoint is still holding up on the medium time frame, sitting at a key level, and we actually didn't technically make a new low on the Friday session. Still bearish momentum, still bearish RSI. 200 SMA sitting all the way down at 328.43, which would obviously be a massive move lower. Again, very little volume through this area. If we break below that 355 level, you would expect this to move pretty quickly through that zone. Zooming out here, you can see there's really not a lot of volume until you get all the way down into this 315 to 320 area. So it either holds right now or it breaks down pretty substantially in my opinion. Moving over to the Russell on the weekly chart, also very bearish, down 3.75%, bearish momentum, bearish RSI. Closed right on the low. You can see this will probably move back to these previous lows around 172.63. Not as bearish as the candle here from March of 23. But I would expect this to continue. We've been chopping in the same zone. We hit that same high. We're below all the EMAs and SMAs, and you wouldn't expect it to stop before we get into major support. If that level breaks, then you would be watching this next low down around 164. Moving over to the daily chart just for a moment, you can see left shoulder, head, right shoulder, big breakdown. Again, expecting those same lows down at that 172 area. Might even see a wick all the way down to 170 based on these wicks that we saw. Overall, still very bearish. It is worth noting that we are in oversold conditions, so maybe we see a little bit of a reprieve and then a continuation, but I wouldn't expect this to flip in terms of trend until we get into this zone. Moving over to the Dow on the weekly, same thesis as everything else, down almost 2%, right at the highly traded zone, which is interesting, still above the 144 and the 55-week moving averages. If it breaks the highly traded zone, you would expect it to move down into these next levels around 329.40, which would be around a 10-point move lower. And that would get us below all of the EMAs, 200 SMA on the weekly chart sitting at 317.02, which would mark that same area from the lows in March. Moving over to the daily chart, you can see we did get a new close versus this midpoint, but we're right at the 144 EMA and the 200-day moving average sitting at 338.20. Critical level here. Again, if this breaks down, you're expecting a push into that 329 level. Bearish momentum, bearish RSI, you would definitely hit oversold conditions before you made that move, unless we at least get some kind of reprieve. But in terms of structure, this obviously looks very weak, taking out that midpoint. Moving over to the equal weighted S&Ps on the weekly chart, looks very similar to the Russell here. We had that double top, lower high, big breakdown, 3.3%. Looks super bearish. We're at a critical level here, 142.50. If it holds, could be interesting. If it breaks down, looking at these previous lows around 139. Next level support for me is 137.23. 200 SMA sitting at 135.96. Moving over to the daily chart, you can see that high, lower high setup, breakdown, breaking down further, critical level like we talked about on the weekly. I added a level here at 140.24, right at these previous lows going back to May. We did throw some wicks below that, which was interesting, but overall still watching that 137.23 level. Bearish momentum, bearish RSI. We are oversold here on the daily chart, which is interesting, but that doesn't mean this can't go lower. Moving over to copper versus gold. I've been watching this for a while. I didn't talk about it in last week's video because we were basically on track for this higher move. 2 weeks ago, we did have a down week, but then we gained most of that back last week. And then this week, big breakdown, took out both of those lows. We're right at this midpoint. Again, kind of looks very similar with a high, lower high setup, breaking down, momentum moving lower, RSI breaking down. It does seem like this thesis is kind of broken here now, and that we might move back down into this 18.3 area, which to me says that the markets are probably going to be moving lower as well. Moving over to SPY Russell and NASDAQ Russell. Both of these continue to look very bullish. The Russell was a dumpster fire this week, as well as the equal weighted S&Ps. Overall, regular S&Ps and NASDAQ continue to look pretty bullish relative to the Russell, even though overall everything looks bearish. Moving over to SPY divided by the M2 money supply, you can see similar thesis. High, lower high, big breakdown. We got below that 21.22 level. Unless we snap back above this could be the start of a big bearish move. Bearish momentum, bearish RSI on the weekly chart. You can see we were watching this 2205 area, COVID high, all-time high, current high, big breakdown. And if this is the start of another move like 2022, this could absolutely be a big move and just the beginning. Moving over to Apple and Tesla, you can see we did have another hold right at this trend line. Obviously a very short-term trend line on the weekly chart, but it is continuing to hold. If it breaks, I'm watching 170.90, and if that breaks, I have some longer-term trends in this area, but really I'm going to be watching that 55 EMA at 161.32. Obviously, this looks very bearish to me. We got the 21 and the 9-week moving average crossing, bearish momentum, bearish RSI, but it is interesting to see it holding versus everything else. Tesla, last week we had that big push on the Goldman Sachs analyst news, and then this week we got a massive push down, 10.75% coming off of this trend that I added here from the July high going back to last week's high. Got very close to my 280.06 level, and then big breakdown below the 144 week moving average. You got the 21 sitting at 237.82. If that holds, that could be interesting, but right now this looks super weak. It would honestly surprise me if we didn't at least test this bottom here, going back to the 14 August week around that 214 area. Overall, still looks like a high, lower high setup, looking for that takeout of the midpoint. Moving over to Broadcom and NVDA. I just wanted to highlight that these guys did throw some pretty big wicks on the Friday session. They actually were positive. One of the very few semiconductors showing a little bit of strength on the Friday session. Obviously, these look weak. They definitely look like a topping pattern. You could argue this is a left shoulder head, right shoulder setting up here, looking for that bigger breakdown. Broadcom had a massive move on the week of 22 August. That was a 19% move on their earnings. And I guess it's probably time for this to pull back at least a little bit. The question is, how much are we going to see that pullback? Similarly here on NVIDIA, massive week on that 22 May week. Waiting to see if the 21 EMA on the weekly chart holds. Also have a level here at 405.30, very interesting level. Next one below that's all the way down at 375.58, and then below that you can see it's just no volume all the way until that 313 area. Big move through there could happen. Bearish momentum, bearish RSI still on both. Moving over to staples and discretionary, big bearish week on both. Staples looks a lot weaker in my opinion just because it took out this previous low here from the end of May. Looking at that 200 on the weekly chart, sitting at 69.58, very interesting. Bearish momentum, bearish RSI, but it certainly could touch that and hold. Last time we got into this area, we did have a very strong move from that 66.27 level all the way up to 77.50. Massive move for staples. Again, if we get into this area and it does hold, we could look for a pretty substantial bounce off of that level. Similarly, on discretionary, 200 SMA sitting at 156.08. We're right at the bottom of this wick from the 14 August week. If it holds, could be something. I doubt that it's going to, however. And you can see just how little volume there is through this area. Like I said, 156.08. Realistically, the 55 EMA sitting at 155.30. That could be an interesting level as well. Bearish momentum, bearish RSI, big volume on that week, and it does look very weak going into next week. Moving over to transports just for a moment, you can see we did hit that upper channel, broke all the way down to the lower channel during this up move. Now we took that out and it is breaking down below that structure. Still have a level here at 233.96, just barely above that, could hold, but bearish momentum, bearish RSI. You do have an interesting level sitting at 230.83, as well as the 55 sitting at 229.94, 200 week moving average at 225.60, and honestly you would expect it to get into that zone. Tons and tons of volume through this area. You can see that really choppy price action that we had for several weeks. If we get into that zone, that would be an interesting area, but right now this still looks very weak. Moving over to breadth here on the 50 and the 200. Big bearish weeks for both of these. Massive breakdowns. Took out multiple levels of horizontal support on the 50-day average. Just one here on the 200-day average for me. And honestly, at this point, you're expecting this to break down all the way to the 36.23 area. 50-day average, still interesting looking at 15.15. If that area breaks, then we're watching for that 2.75 area. If you get here, however, that could be a very interesting level and potentially point to a pretty big up move. You can see this goes back to that October low. And then we had a massive run from this point all the way up into the 90s. Massive move here. And it basically followed straight through with very few pullbacks. Could be an interesting move from that area. Zooming out here on the 200-day average, obviously we're nowhere near that level on the 200, but this 36.23 area is interesting. Moving over to yields just for a moment on the daily charts, I just wanted to highlight that these did pull back a little bit on Friday. 2-year yield pulled back Thursday and Friday. 10-year yield just on Friday. Big bullish move on Thursday. But showing a little bit of weakness. Obviously, these structures are still very bullish and we're making new highs pretty consistently. But interesting to see just a little bit of weakness there. Moving over to the dollar. Bunch of weeks in a row here of bullish price action, bullish momentum, bullish RSI. Everything still looks very clean. We're above all the EMAs and SMAs here on the weekly chart. We did get above my 105.50 level on a closing basis. If this continues to rally, we could start pushing back to that October high, which means we could see equities pushing towards their October lows. Doesn't mean that it's going to happen quickly, but last time this happened, it was a pretty substantial move on the dollar, and it seems like that might be happening again here. Doesn't mean we're not going to get a pullback here and there, but still looks very strong. Moving over to the VIX on the weekly chart, you can see that massive bullish candle, bullish momentum, bullish RSI. Everything looks clean to the upside. Broke above the trend. Looking at the 55-week moving average at 1961, you would expect it to get into that area before we broke down. 1850, also an interesting level that we wicked on this previous little bump that we had. But overall, this looks like it's going to be a pretty substantial move. If these areas break, then you're watching this longer term trend up around 25, which would be a pretty substantial move down in my opinion. Moving over to my accounts, you can see I'm just holding my core position. I was down about $1,000 on the week, or about 1%. Not terrible considering how far down all of the indices were. Of course, I have a little bit of a bearish bias at this point. I'm just holding my core position with some covered calls. The NASDAQ seems to be holding up a little bit better than the others, which is interesting. We'll see if that continues into next week. Like I said about the SPY over the M2 money supply, if this is a start of a bigger down move, I'm probably going to look to take this position off if we start to see a bigger continuation here. The longer term trends are still intact, but all the shorter term ones look very bearish. Let me know down in the comments section what you think the economy is going to do over the next year or so. It is fun to speculate between all of the different possibilities as well as the percentages. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.